When somebody tells you invest in companies like Paytm, Zomato, because they are the businesses of the future, it's in the future. So you have to ask, when is that future going to come? Hey everyone, this is Sri Ramaya. You're watching Simply Put, an initiative by Business Insider, where we take the jargon out of the news and add insights instead. Now, when somebody tells you invest in companies like Paytm, Zomato, because they are the businesses of the future, which they're basically saying that at some point in the future, they're going to make so much money that if you are holding those shares, you're going to, float in money like Uncle Scrooge from DuckTales. But that's not going to happen now. It's in the future. So you have to ask, when is that future going to come? At least when is it likely? So in the case of Paytm, some analysts say that it will be March 2027 before the company starts showing any amount of profit, at least covers its basic costs, what it takes to run the business, not your tax paid to the government, not interest on loans, not depreciation, none of those things, just the cost of running the operation. It will be March 2027 before it can cover those costs. Why is it going to take so long to turn in profits? Paytm has a lot of businesses, but it's not a market leader in any of them. And there's only one of its many verticals where it can make some serious money, which is lending. But it's already a very competitive space. There are a lot of startups which are already bigger than Paytm. If you remember, and new ones are also coming in, right? If you remember during the World Cup T20 and IPL, you saw ads which said, "De dena aaram se." That's a company called Postpay. Similarly, there are many others who are entering this space. Even bigger banks are entering this space, like ICICI, HDFC, Kotak, SBI. They also know that young people are not going to the banks and filling up those long forms. They just want something at the click of a button. So they are also spending money on building the digital infrastructure and creating those apps where people can borrow money from, which means more competition. More competition means lesser profit margin, and therefore the profitability for Paytm may eventually get delayed. That's what the analysts are factoring in. But these are all moving parts, right? A lot of things change as we go. For example, just a few days ago, an RBI working group said that the digital lending space must be regulated tightly. There should be more rules and they should be tight. Because out of the 1100 apps that exist today, by the way, 1100 apps exist today from where people are borrowing money, out of which 600 of them are illegal. If that is the case, then when those 600 apps that go out, where will those people go who are borrowing money from there, right? They will come to people like Paytm, Simple, banks, wherever, right? They can choose to. Basically, the existing players might get a bigger portion of the pie. Also, Paytm will apply for a license to become a small finance bank next year. That will improve its potential a little bit. How much and what is the market response, etc. We'll have to wait and watch. So, like many projections, this March 2027 projections may also go wrong. Company might turn profitable sooner, or it might take much longer. We don't know that yet. We know that there is going to be profits sometime in the future, but we know for sure that it's not going to be in a hurry.